Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, October the 25th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. And hopefully you know by now that these videos are for educational purposes only, and your results may differ from mine. And also, always have your stop loss in place. Respect the risk management. So for the week, you can see right now most of the gaps have filled. We still have a handful of gaps that you can take advantage of, one being the Euro USD. And just so you know, you can see where the weekly open is. And so we had an up week, before down, before up. So who knows? Are we going to... We've already exited out of the upper weekly wick zone. So who knows? Maybe it'll come down and come right down through the bottom. We'll just have to wait and see what happens. And for the week, you can see here, we're starting the opening range for the week, which is the first day of the week, the high and the low. Here's the range, opening range for the month right here. And then the opening range for the year is from here to here. As you can see, we got in that opening range last week and then we fell through it. So this is the last trading week of the month. Let's see, do they bring it back to the open? Monthly open? We'll just have to wait and see. Right now we're 124 pips above. So what some of you traders might want to do is make note of these, or if you don't like trading the pound dollar, make note of your other pairs, the pairs that you like to trade. You just keep these numbers in mind. Once again, 209 pips below the yearly open. We had an inside bar 2 days ago, and we broke out of that inside bar. You can see we had an inside bar 6 weeks ago, and there's that range right there. For trading right now, you can see only a few opportunities inside bar on the day. We have a few more on the week, and there's a handful on the month. And just looking at the range and where price sits right now, you can see we don't have any pairs really even close to 100 pip in range. So we'll have to wait for Monday, later Monday, London, New York session to see if they can get this party started. We're only looking about, what, 29, 30 pips of range here. Okay, we had the pivot point above the weekly open. And let's see, but we had gapped up slightly. So depending if you use them both as a bias, then that was the signal was called off because you had conflicting signals. So we haven't hit the pivot point yet. We're 26 pips below it. But we did fill the gap. And range is too low, no rat zone. Once again, we haven't hit that pivot. And just so you know, the weekly pivot's at 1.3037. So we have already taken out that weekly pivot. Once again, on the daily, we haven't hit it yet, but we did take out the weekly. So you can see the closest two missed pivots on the weekly and the closest two missed pivots on the daily. Actually, these two are the closest two, but the one above and one below. We're in the lower wick zone of the previous day. We've already been in and out of it. Looks like in it, out of it one time. Now this is interesting. There's the close, there's the open. What happened there? We had a close of 52. No, wait a minute. I'm looking at that wrong. There's the open, there's the close. Never mind. I just got back in from watching football and shooting pool, so my head right now isn't totally in the trading game, but I'll get there. And as you can see here, once again on the range charts, there's really nothing to even talk about at this time of day. And on a simple trading chart here, you can see we put a 3-ball in at the bottom, moved up to a 2-ball, down to a 2-ball. Looks like we're moving back up to a 2-ball. And I guess a lot of traders are liking the semaphore trades. They're using the semaphores in different ways, and I guess some people are profitable. Here's something to note. You see this gap right here, price gapped up. See where it gapped up from 3033. So let's see if price comes back and fills that gap. It usually does. Might take it just a few minutes, might take it a few hours, but I would imagine by this time tomorrow that gap's filled. I could be wrong. Simple price action screen, hard to go wrong. Trading with the H1 candle color at the line, very simple. And let's say I did have a trader was asking me once again about all the different methods. And I don't know how many times I tell new traders, one method, one pair. Cut down on the variables. If you could do that, focus on your risk management, focus on taking profit when you can, you'll do okay. And you practice this, because when you practice the same thing over and over and over again and you practice correctly, you start to develop skill and confidence. You can almost think of it like a trade, almost you're your own apprentice. You know, people will ask me, well, do you mentor? Do you do this? Do you do that? It's like that's what these videos are for. I wouldn't tell you anything different if you were sitting here alongside of me. But the only thing different is I'd have a 2x4, and if you did something stupid, I'd whack you upside the head with the 2x4. You know, kind of like the old show Kung Fu. Whenever they messed up, the master would hit them with a stick. I'm just joking. I wouldn't hit you with a 2x4. Metaphorically, maybe. It's like, what the heck are you doing? What were you thinking? Not what were you thinking, but were you thinking? Because you don't want any bonehead moves, any airball trades. It's just not necessary. And let's see. I think out on Crestlick, somebody again was asking about the buy zone, and yes, it's profitable. And then somebody else was they were using the holo to trade stocks. Now, I you see, I am not sure if it would work in the stock market because you got to remember you've got some the pre-market hours are actually 90 minutes from I believe it's 8 o'clock New York time to 9:30 before the stock market opens, and then you have like 6.5 hours from 9 o'clock to 4:30 New York time. And then so that's only 6.5 hours. So doing the highest open, lowest open holo trade, that might be kind of tough. It might work. I don't know. You'd have to, and I don't even know, tell you the truth. I couldn't do that in Stock Fetcher because Stock Fetcher only works with daily. Now you could do the highest open for the month, lowest open for the month. That might be beneficial. But as far as the intraday stuff, I don't have any way of running any type of frequency distribution or statistics to see. You just might have to look at your use your eyes. But I wouldn't know off the top of my head. And see, that's one of the things I have to tell people. In fact, I just received an email today, somebody saying hi, but they were asking if I had anything on market structure. Um, you know, you have to be able to separate concept from reality. Support resistance, that's a concept. Supply demand, that's conceptual. I mean, we're talking about the foreign exchange here. I don't think anybody watching my videos can either have such a supply or demand to change the market, so it's irrelevant. Um, but they were asking me about this market structure. Do I have anything for market structure? And I basically see in all caps, I said no, not to be yelling, but just to hit the point, press the point. I don't do those conceptual things. My trading is statistical based, um, based on the range of the pair. How much does the pair move? When does it move? How does it move? It's all about movement, things that I can measure. Can you measure market structure? I mean, are any two people going to agree about market structure? But, if I say the high is here and the low is here, people go, yep, that's the high, that's the low, and the distance between them is this. They go, yep, that's the distance between them. See, dealing in reality, in facts, not opinions. And that's one of the things that I caution traders about. You have to deal with the facts, the reality of the market, and you cut down on the variables. So when you look at a chart like this, it's very clean, it's very simple. I mean, we could even pull some of the things off the chart. I mean, we really don't have to have the semaphore. It's just kind of a help. But I mean, you could actually count by hand, you know, let's see right here. Okay, we got 1, 2, 3, 4, 5. So somewhere, 1, 2, 3, 4. So somewhere around here, we get the one ball, which is usually the highest high of 5 bars. And that's when the one ball will appear, or the lowest low of 5 bars. So we've got 1, 2, 3, 4, 5. You see it made a lower low. And then the 2 ball is 13 and the 3 ball is 34. And those are all fib numbers, and they skip every other fib number. So like a 4 ball would be 89 because the 3 ball is 34 and the next fib is 55. So the next one's 89. But and sometime in the near future, you might actually see some 4 balls, 5 balls, and 6 balls. And in fact, for those of you who remember 3Clips, he actually said hi to me on Facebook. I hadn't heard from him in years, so hopefully, maybe he might start watching the videos. I'll give him a shout out to you. There's 3Clips. I'll even post the link. So maybe I don't know if maybe he's not trading anymore. Maybe he made enough money that he quit trading and I think might be spending time with his family. So that pretty much wraps up the weekly open and gap traders. Once again, there's a handful of pairs that you might still be able to take advantage of those gaps usually filling. But remember, these videos are for educational purposes only, and your results may differ from mine. So the other thing I need you to keep in mind is that it's not what you trade, it's how you trade it. So go out there and drain the banks. And if this is your first time, welcome aboard. Click subscribe, click like, click share, click the share the video all over the internet and trading forums. And this is the Rumpled One, over and out.